I'm Larry Uильямс, and I'm honored to have this opportunity that you'd even think that perhaps I might have the answers to some of your questions. So I'm going to read the questions, the 10 most popular ones that you had from your website. And here we go. The first is how to deal with doubts, how to develop patience, how to stick to the system. Well, doubts really come from being fearful. You're fearful of either the system won't hold up, it isn't any good, or you're fearful of your response, how you will handle the system. So you really have to work on those two areas, which means you must know your system. You got to prove it. Does it really work or not? If you've proven it, then it's a lot easier to stay with it. Also, to have a stop loss not on the market but on the system. If it stops failing at some point to some degree that it hasn't in the past, stop trading it. But probably more important, do you have the confidence in yourself to do what it takes to do? I can't help you with that. You have to resolve that question yourself, but it's an important part about having doubts. The next question is how to determine trend change in a narrow channel. Well, if a market starts to channel and get a very small channel, it means there hasn't been much volatility. So it doesn't take as much volatility for that market to expend out above or below to give you opportunities for trend changes. So when a trend channel gets very small, it means there is a trend change coming, without a doubt, because markets aren't always in small channels. They go small to large. There's a big move coming. Just get it ready for it when we break out. Closing above that channel, closing below the channel, probably your best indication. My next question is how to predict a collapse in the market. Well, what market? Stocks, commodities, gold, silver? That's a pretty tough question. But what really it gets to is fundamental conditions. When we have an oversupply of soybeans, the market's going to decline. It's almost true in the stock market as well. When interest rates are doing one thing, when money supply is doing another thing, fundamental reasons cause these markets to move. Your charts don't cause these markets to move. There are several indicators that have a pretty good suggestion that we're ready for a market top. One would be odd lot short sales. One would be what the commercials are doing, what the advisors are doing, what cycles are doing. Those are some indicators you can look at. My next questions are about news. Do I follow news? No, I really don't. I don't subscribe to newspapers. I look at my charts. I look at my indicators. I would prefer to deal with those indicators because I've used them for 50 years, first of all. And I know there are good points and there are bad points. The news, sometimes news comes out, it's very bullish, markets decline. Next day, very bearish news comes out and the markets rally. So I've not found the news is particularly a reliable thing to act on. So I don't think there's any one bit of news that's better than another in terms of what news I should follow the most. I simply don't pay attention to it. The next question, what do you think about seasonal trade and the role of summer session help determine the future prices of commodities throughout the world? Well, I was the first person to ever write a book about commodity seasonal tendencies, and there's a real problem with it. The problem is the markets don't always follow the same seasonal pattern year after year after year. What's more important is to look to see if price this year is congruent with the seasonal pattern. If it is, then the seasonal influence will most likely work, has a much better chance of working. Or, let's say there is a seasonal tendency to rally in wheat in the summer, and there is, we know that. And I see commercials being heavy buyers, or I see that the public is selling the market. I can back up one indicator with another. That's what I'm looking for to make a seasonal work. I would not trade a seasonal tendency all on its own. The next person would like to know a little bit how I was affected by the PFG closure. Well, we did have an account at the PFG, and just like everybody else, we've gotten a little bit of the money back, but not much. So, we're standing in line. It's a long process. It does show the inherent inequity of the way the American commodity markets are regulated by the National Futures Association. They did not step up to the plate and take responsibility for it. They should have. There is a cure. They could do it. They haven't done it. It bothers me a great deal. So you have to be very careful with what brokerage firm you trade with. I currently am trading with several brokerage firms, Knight Capital, TradeStation. So it depends if I'm stocks or commodities as well, obviously, but that's an idea for you. The next question is one I really look forward to answering to because I think the question starts on a bad foundation. The question is, how to understand the intentions of major players when they are bluffing or play for real. I don't think that they bluff. I don't think they play for real. I think there's a whole bunch of Cassandras out there who have written about people trying to move the market and do this. Look, I know these people. I've been in this business over 50 years. I've known some of the largest traders in the history of the world, personal friends of mine. They don't play the market that way. That's not to say at one point somebody can't try something one time. But as an ongoing phenomena, I think that people that are talking about that are misdirecting you to what's right in front of you in the marketplace, getting you to become paranoid about the market, about them versus me, as opposed to, hey, what's the market doing? That's really what matters. You've got to trade what's in front of you, not all these rumors, not the news, not these ideas. You pay attention to your markets. The next and final question is, Larry, how do you turn $10,000 to $1.1 million in the trading championship? My gosh. Can you do it? Have you done it again? Well, the answer is I have made over $1 million repeatedly since that trading championship in 12-month trading period, starting with a little bit more money than $10,000, but yes, I've continued to do that. So what I really did and why I had such phenomenal success was I was really hot in the market. I was totally focused on what I did, and perhaps more importantly, I used a very, very aggressive form of money management. If you want to make a lot of money, you have to expand your risk. But know that if you expand your risk, that means you also expand your potential to lose money. Now, at 71 years of age, I really don't want to lose all my money, do I? So my risk is different now than I would take as a young man. But nonetheless, if you want to get exponential gains, you have to have exponential risk. But that is a two-sided coin. That sword has two cuts to it, so be careful. That's why I suggest that if you want to make big money, bet small. And finally, I'd like to say to all my friends, I look forward to seeing you someday in the future there. And until we meet, good luck and good trading.
I've even offered here right now, guys, 70 even bid. Here comes Morgan Stanley to sell. Morgan Stanley comes in and sells 100 cars here. 75 evens are trading.